Welcome to Access Eco, your trusted resource for sustainability news. Today's guest is Randall Locher. Randall is the CIO of Paladin Realty Partners, a real estate investment manager based in Los Angeles, California, that develops housing throughout Latin America. Randall, it's such a pleasure to have you on the show today.
Yeah, it's a pleasure to be here, Anna. Thank you.
So tell us a bit about Paladin Realty Partners and what kind of projects you're traditionally working on.
Sure. Yeah, Paladin has been in business for 25 years. We started in the U.S. Developing all kinds of real estate, rental apartments, hotels, retail, pretty much everything across the U.S. And then in 1998, we started, this was before my time, but the firm started investing in Latin America. We saw an opportunity down there for a few different reasons. One is scale. It's actually a very big region. We target 4 markets, Brazil, Peru, Colombia, and Mexico, and there's 420 million people just in those 4 countries. So there's a real opportunity set in terms of scale. There was not a lot of capital going to the region, so we did not have a lot of competition for our equity. So we found that we could achieve better returns without having to compete with thousands of other firms that were trying to do what we wanted to do. And also just the demand-driven opportunity. There's so many more households formed every year than homes built. It's remarkable. In Brazil, there's 1.5 million homes needed every year just to keep up with population growth, and only about 300 to 400 homes built. So that's like a 4 to 1, some years a 5 to 1 difference between demand and supply. So when the economy's great, the housing business tends to do extremely well. And even when the economy is suffering, like we saw in Brazil in the last recession, 2015, 16, 17, the absorption was still quite strong, and the returns held up pretty well. So kind of the demand, the demographics, and the scale is the reason we went to Latin America. And we started focusing on housing largely for the reason I just mentioned in terms of the supply-demand differential. There's also very little debt needed, so it's a lower risk return when you're not highly levered. You're able to pre-sell sometimes 100% of the homes before you even start building. So you can take a lot of the risk off the table before you have to put a shovel in the ground. The projects are usually 3 to 5 years, so you're not talking about a 10-year kind of stabilization and exit plan where you have to ride the cycle. So it's better visibility in a shorter duration, and the investment size per project tends to be more in the $3 to $5 million range. So you're not putting $20 million, $50 million per investment. So if you raise a couple $100 million, you can literally have 75 different projects to diversify your risk. So for those reasons, we like housing in Latin America. We've done all kinds of different types of housing, some luxury and some low income. And overall, we've developed 35,000 units in the region over the past 20 years, about 50% of that in Brazil, and then 15% or so in Mexico, Colombia, and Peru. And then we've done some in Uruguay, Chile, and Costa Rica as well. So we've been in many markets. We've sort of consolidated our footprint a bit to the biggest markets of Brazil, Colombia, Peru, and Mexico. And so that's where we have local offices today and local professionals there that are great and smart and hardworking and executing our business plans. So even with COVID and the inability to travel, and I'm usually on the road once or twice a month, our local teams have done an amazing job of holding things together. And we've kind of seen that resiliency play out in COVID. Our sales today are just as strong as they were a year ago and earlier this year. So that resiliency and that demand-driven opportunity has played out throughout COVID. So it's been a relatively good story despite the disturbing headlines that you hear about Latin America. So so that's kind of our housing story throughout Latin America. And I think the most compelling opportunity is in the lower income range, and just traveling down there and seeing all the need. And when you talk about the housing deficits, so much of it is in the low income. 90% of the housing deficit is in the very kind of poor segments. So we've been
Yeah.
trying to do more and more of that as we kind of progress with our learning curve and business strategy.
Definitely. I see how over the 20 years, as you're explaining the history, Paladin Realty Partners have really see a need, fill a need, right? Like, okay, here's this big demand that's not being filled. We can come in there and fill it. And so now you're seeing some projects in that lower income range that you, again, see a need, fill a need that you're really looking to start working toward. I know that you yourself are very passionate about sustainability and supporting communities of all income levels. What are some of the measures that you've already been doing to incorporate sustainability into your projects so far for some lower income communities?
Yeah, we've been working, the IFC has a program called EDGE, which is Excellence in Design for Greater Efficiencies. And it's a tool that you can use to adjust the different components of your homes to save on electricity, water, and the embodied energy and materials. So there's sort of three metrics. And if you achieve 20% savings in each of those three categories, you are certified by the IFC as EDGE compliant or EDGE certified. And so we discovered this tool a couple of years ago, and it's really quite easy to use. It's not prohibitively expensive. So when you talk about some of the other certifications, it's really it's quite difficult to use and it's expensive. So when we work in this, we have to convince our local partners that it's worth the extra investment to go for a certification that, you know, they may not value the same way that we value. And we seek to export our best practices in terms of ESG. We have a very robust ESG master plan where all our partners have to abide by certain certain standards in terms of their hiring and firing practices and their environmental health and safety and all different kinds of metrics. So this environmental component is kind of the newest thing that we've been really urging everyone to adopt. And so we have today, we have 3 projects certified in Brazil. We have 1 in Peru, and we have 3 underway in Colombia. And by the end of October, we should have another 4 in Brazil, another 2 in Colombia, and 1 more in Peru. So by the end of the year, we should have 15 projects certified as EDGE, kind of the standard EDGE 20% savings. And
great.
I think the best example of that and sort of a model where I feel that there's a great opportunity going forward is a project that we're doing in Mexico with our partner Casas Crea, who, you know, they were already on this route when we met them. So it was a very seamless transition for us. We invested in a project called Vilas del Fresno, which is outside of Mexico City. So it's commuting distance to Mexico City. It's 1,900 low-income homes in 4 different phases. And they're affordable. They're in the range of 35 to 40,000 US dollars a piece. So they're affordable for a family making, you know, between $4,000 and $7,000 a year, which is kind of in line with the per capita income of Mexico. And in terms of sustainability, we have solar panels on the roofs, which heat these hot water tanks. So the water is already heated. So when it goes into the home, it may need a little bit of additional heating, but you're not taking it from, you know, room temperature to hot. We have LED lighting throughout. We use low flow plumbing fixtures. Our partner builds with these aluminum molds where they do cast in place concrete that's much more efficient, lighter weight, less steel. They have a cross ventilation design. They're sort of townhomes where you can have flow of air throughout the units. So heating and cooling again, and just kind of air quality is better. And so we got that certified 2 years ago. We achieved 28% savings in energy, 24% savings in water, and 74% savings in the embodied energy in materials. So this was, yeah, it was a really interesting exercise, and our local team and our partner worked hard to kind of optimize these components. And you know, that's going to save the residents, you know, 30% on their utility bills on a monthly basis, you know, and to a lower income family in Mexico, you know, that can add up to as much as $200 over the course of a year, which, you know, can move the needle in that market. So, so we really think that solar is the key, I think, component going forward that we want to continue to optimize. And then the water savings in terms of the toilets, the faucets, the shower heads, you know, you really don't notice if there's more oxygen and air mixed in with your water.
Yeah.
You still get wet and you can still wash your hands and you can still take a shower, but you can drastically reduce the amount of water that is used. And so we think Villa Estelle Fresno is a great start and a great kind of evolution of what we've done, and an example of what we can do in the future.
Wow, and an example of that, you can make that work even at those lower income levels for your investors and the people who are getting involved in these projects, right?
Yeah, the solar component is only about $300 per unit, so it's really not prohibitively expensive. And we think we can add a little bit more solar and get to 40% energy savings. And with 40% energy savings, you qualify for Edge Advanced. And with Edge Advanced, you can then measure your utility costs over the course of a year and purchase carbon credits to offset the net energy used. And then you can, if you can offset those carbon credits by purchasing carbon credits, you can get to Edge Zero Carbon. So we can actually develop homes that are certified as zero carbon as they get more energy efficient and as we purchase carbon credits on behalf of those homeowners, which are not prohibitively expensive. We haven't done that yet, but that's kind of my goal, is to try to get to zero carbon for as many homes as we can in this development. I haven't talked to our partners about that yet, but I think they should be pretty amenable to kind of continuing to be on the leading edge of this initiative.
Definitely. That's one thing I've found with interviewing guests for the show, is that, you know, this sustainability trend, as some people might see it, is really becoming the wave of the future, that as far as an investor is concerned, you want to be on these sustainability trends because it seems to be the way, as I think I've heard you say once, the climate change is only going one direction. So we have to start doing things about it. And I know that a lot of the world has, you know, they make loans with green strings attached for companies because that's the way things are going. And so we see, you know, the Teslas of the world and these things, these are the things you want to be invested in. Just like, you know, when cars came out, you didn't want to be invested in horses and buggies anymore. You wanted to make sure you got invested in automobiles.
Yeah, it's happening, you know, it's happening. And I think what really moves the needle is, I think, the European and Scandinavian pension funds and institutional investors are kind of at the leading edge of this. You know, they're not allowed to buy buildings in their portfolios that don't meet certain environmental standards. So if you're a developer and you're building something that does not incorporate sustainability, you're really limiting the universe of buyers for that. So,
Right.
You know, it makes these things a no-brainer going forward, even if you're personally not aligned with that mission, just in terms of the risk profile of a new project. If it doesn't comply with kind of international best standards for what an institutional asset needs to be, then, you know, your exit alternatives are that much fewer. So, you know, capital tends to move the markets, you know, where human, you know, personal preference may not. You know, there's huge incentives out there internationally to build greener, more efficient homes. Real estate consumes about 40% of global energy.
Wow.
It accounts for more than 20% of the carbon emissions in the world. So when you think about real estate,
I didn't know that. Wow.
yeah,
That's a staggering statistic. I didn't think that homes, you know, I'm thinking cars and planes and all the things that we think of emitting a lot of carbon. You don't think of your house doing that.
yeah, and you know, all the, you know, commercial real estate, you know, industrial real estate, office, you know, apartment buildings, malls. I mean, it's a big number. So the potential in real estate to move the needle is substantial, and the world recognizes that. And I think the adoption, is only getting more interesting as we go forward.
Absolutely. And we have a pretty conservative demographic that watches this show. And I think one thing that, as I've been studying sustainability more often, I feel like at least the people I speak to, the resistance to sustainability is that upfront investment, right? And thinking, well, this costs more. Why are we going to, spend money if this isn't going to be profitable? But so far, as I've researched and I speak to different experts on the subject, it actually becomes one of the best investments that you can make. I actually, on the last episode, we spoke to someone in sustainable fuels. And of course, right now with the pandemic, a lot of, traditional oil and gas is way down. Their sustainable sector was the only profitable sector because there have been many companies who've committed to these sustainability measures, and that's not going away. And so, as far as the argument that it's not profitable, it really is looking like it's going to be the most profitable thing that we can invest in moving forward.
Yeah, and as the technology improves too, it should get even better.
Mhm.
Like a flat screen TV used to cost $4,000, and now you can
Right.
get one for like $300. Solar panels too, as they become more efficient and less expensive, is just such an incredible way to, the payback period is, can be, a couple of years, and then the savings, go on into perpetuity. So yeah, the business case, makes sense for those that are willing to think about it and kind of learn about it. And I'm still learning about it and learning about, what else we can do and how we can do more and do better. And the potential is huge, and it's exciting, and it's a fun project to
Definitely.
continue to work
I'm
on.
thinking too, we both live in California that has been on fire for the majority of the last few months. Well, every year pretty much it goes on fire. And, so we have state mandates now that if you build new construction, it has to have solar panels because we just can't afford to keep heating up our state more and more and more. And, then we lose all of our real estate investments.
Yeah,
We saw Malibu burn a few years ago, with millions and millions
yeah,
each home.
the cost is incalculable, and it's only getting worse. I mean, this fire season has been by far the worst on record, and we still
Mm.
have another month to go. So yeah, it's not getting any better, and unfortunately, the poorest people in the world tend to suffer the most, that are in regions where rising sea levels and increasing arid conditions in Africa, and all these
Yeah.
changes tend to impact those that um, don't really have an option to just move or you change what they do. So
And
the
that's where a lot of
impact
the
is not.
carbon credits, I'm where people are like actually planting those trees in the Amazon and getting some of that to come back. And I was reading something about bamboo. If every person planted 3 bamboo plants in their yard, they would offset their entire personal carbon footprint. And so
Wow.
a lot of these measures, we've gone so bad on the deforestation, thinking we could just keep cutting down trees, we could just keep building things everywhere, and we're really seeing the effects of that. I think with COVID-19, it was really impressive to see how fast the world could recover. When the beaches didn't have people out there with their sunscreen pouring into the ocean, turtles were born that hadn't been for years, all these different things. The planet can really heal when we just decide to take care of it.
Yeah,
And
yeah.
so,
It's been
yeah,
an interesting, not silver lining, but the one of the positives of the world slowing down is yeah, the world can breathe a little more. And the Amazon has been such a big story. I lived in Brazil for 2 years, and spent a lot of time down there, and seeing the Amazon burn is just such a disturbing image.
mm,
So it's up to the global community to really band together and come up with a solution for that, because it's such an asset to the world, yet it's under the control of one government. So ideas that the world can sort of compensate Brazil for not utilizing that area to their own
yeah,
economic benefit.
hmm
The tragedy of the commons, is just that asset is tremendously valuable in different ways, and it's valuable to Brazil in one way, but it's valuable to the earth in another. So
You
it's
know,
a
it would be
complicated
interesting
issue.
to see in the future global economies trading in some way on how much protected land you have, right? Because you're providing the earth oxygen. So, you know, we've kept this much protected land, and so this is actually a profitable because we're providing this. It would be interesting. It seems very off. Like I can't imagine it happening, but at the same time, if we're all struggling for air, it just might.
Yeah, there's a conversation around exactly that, for an Amazon sort of a fund to go into education, regeneration, other sorts of more sustainable development. So Brazil isn't just losing out on all of that land, but they're sort of being compensated for it in more environmentally sustainable ways and being encouraged to preserve, the lungs of the world. So
Yeah.
there is talk of that. The president of Brazil right now, unfortunately, is not very environmentally minded. So
That happens in some
it may take a
countries.
while, but he's economically minded as most are. So there could be a solution there.
Which
But
is why, you know, I think talking about the economics of sustainability is so important and showing how it really is profitable, especially long term. I want to talk a little bit about you were saying how the people affected by, you know, the rising tides and all these kind of things tend to be the extreme poverty demographic. And I know that you have done the low income housing in Mexico for the people who are making 7,000 a year, maybe a little bit more. Um, but tell us about your passion to be able to create a project sustainably for people who make just a few dollars a day.
yeah, it's a challenge to get that low, and to get that low, down the pyramid, you need a couple of things. You need investors that aren't looking for the maximum investment return on their investment as possible. So our existing investor base is more focused on opportunistic 20% returns. So this isn't a product for them. It's more of an investor that wants the value created to go to the family, inhabiting the home. So it takes kind of a combination of capital sources that are either more patient or more kind of grant-based, that want to sort of kickstart a perpetual vehicle that can build for the low income. And then a combination of government subsidies. And government subsidies vary by country, but most countries do have, they realize the importance of home ownership in the whole economic growth and kind of sustainability of their economies. So there are programs in Mexico where you can, for a $10,000 home, you can get up to a $4,000 subsidy from the government. And I spoke with a very interesting guy yesterday who's doing this, and I just loved our conversation. They come in with financial literacy to people that work in informal sectors, and they teach them about savings and about credit, and they start to analyze the informal sources of income. So these people may sell, food in the public square or whatever, but they can start to develop a trend for how much they earn and help them save. And so of a $10,000 home, over a period of time, they can help them save $1,000, which would be 10% of the home. They can get a subsidy from the government for $4,000. So together that's, $5,000. And then you can lend $5,000 to that family over the course of, a 5 to 10 year loan. And that payment boils down to be about a third of what that family earns. So that's kind of the metric for housing affordability, is that you're not paying more than 30% of what you earn on housing. So if you're spending 75% of what you earn on housing, all the rest of your
And you live in California.
lifestyle, your health and your food and everything else suffers. So you want to try to cater a price point and a mortgage payment that works
Right.
in terms
And
of
that they're
that.
not defaulting on because they absolutely can't make it as it's so much of their income. I was thinking about this, bringing in financial literacy experts and helping people raise that kind of capital that might have seemed impossible at one time. and all these measures that you're talking about. And sometimes when people bring up low income housing, there's a certain demographic that says, I don't want that low income housing because they don't take care of it. They don't. But when you really get that investment of a home buyer on low income housing, where they are working towards owning something of their own and, saving in a way they've never saved before. This is where you get very invested buyers who take care of these homes, and it doesn't become, this projects off on the edge of town. It becomes a way to create even more economic stability, because now these people know how to save. They are invested in their own smaller businesses as well as, what they were doing before, and invested in making sure that their generations after them can own homes as well.
Totally. It's the beginning of economic mobility. Equity creation through home ownership has been such a story of the US, and some of the disparities we see today are because those same opportunities didn't exist for everybody. And in Mexico, this case study I was just mentioning, this buyer will have put in about $6,500 of their own money by the time they own this home. But when that home is reappraised, they're reappraising in the $35,000 range. So this person now has an asset with equity, of $30,000 from no assets, no financial literacy. Now they have credit, they have a stable place to live, and we've seen even throughout all markets, the default rates on mortgages are super low, even in the depths of Brazil's crisis. Wow. They were in the 2% range, and so people in Latin America, that it's not just the American dream. I mean, it's the world's dream of owning your own home, and these people will do anything to not lose their home. So it really is life-changing. There have been examples of home builders that have come in and kind of built really crappy stuff out in the middle of nowhere that didn't make sense, that have been abandoned. So there are examples of bad development, and then there are great examples of life-changing development, and they all
love the stories you told about the Mexico community, where they're really banding together as a community and doing community soccer games with their kids and community events, and it's really changed the shape of that community.
Totally. Yeah, this group has a whole department just based on the community and bringing them together for health and wellness, and Christmas parties and dressing up like Santa and all kinds of stuff. It's just, it creates a whole new ecosystem for these people, and they're safe. There's security. So security is such a thing for kids to run around and play in the streets. That doesn't exist safely in many parts of the developing world.
These kind of things that maybe they weren't able to grow up with, being able to have Santa come and do community events. It might have been a dream that they'd seen in movies, but never really thought that could be something they could have. And so I love your passion for everything you're doing. 2 quick questions before we have to close. I could just keep talking about this with you for hours, but where do you see the future of sustainable building in like the next 10 years? And then where can people get a hold of you?
I think the materials that we use to build are really ripe for transition, and concrete, doing different things with concrete, in terms of mixing them. There's a hempcrete mix that's lighter weight, and different composites that can make concrete much more environmentally friendly, much more insulative, so it cuts heating and cooling. I think there's a ton that can be done that. 3D printing is the future as well. Yeah. There's a group out of Austin, Texas, that's building the first 3D printed community in Mexico right now, and these are also homes that can be built for about half the cost of a traditionally built home in 24 to 48 hours, as opposed to months. So the efficiency that will come with 3D printing is really exciting. There's materials, and then on the material front, one idea that I'm pursuing in Colombia and Costa Rica is the idea of recycled materials. There's a group out of Bogota that's doing. They take plastic bottles, recycled plastic bottles, and chip them up and melt them down into bricks that feel like bricks. And there's 18 billion pounds of plastic dumped into the oceans every year. And so a business plan where you could employ fishermen and, you know, people to collect plastic, recycle plastic, create these building materials, and then build low-income homes with it is probably the thing that has me the most excited. There's a lot of work to do to put that together, but it's something to shoot for. And I think those sorts of solutions where you can really solve multiple problems with the same business plan, I think that's going to resonate with a lot of people, and hopefully we can be a part of that.
Well, you've got me excited about it. If you've got the audience excited about it, where can they find you?
Our website is www.paladinrealty.com. And my email address, if you want to reach out to me directly, is rloker@paladinrp.com. Yeah, or my Gmail. You reach me anyway. rdloker@gmail. I would love to hear from anybody that wants to learn more.
Wonderful. Well, thank you so much for coming on the show today, Randall. You've been fascinating, and I've learned so much. Thank you,
Raina.
Oh, you're welcome. Thank you so much for watching Access Eco. This show is run by people like you. Thanks so much for watching Access Eco. This show wouldn't happen without people like you. We really appreciate seeing you in the numbers come again and again every week. And just keep watching, keep checking out all these environmental statistics and how sustainability can really equal profitability in so many ways. Until I see you next time.